Hey everyone, welcome back. Let's get right into it. We have the S&P 500 open on the daily chart, and it is important to point out that we are retesting the first lower high that we had since the COVID crash. And we have this trend line right here, which is pretty important. Now, trend lines are obviously not perfect, so you got to use a little bit of imagination and subjectivism, but nonetheless, there is a support here. So if we do test this previous high and we don't just blast right through it, which is what we're looking at as of right now, because you can see a little bit of consolidation in the past 4 days. We pretty much have a consolidation around the 455 level. We could potentially see a little bit of a breather back down to like the 435.91 level, somewhere around there. Now, it doesn't have to quite reach that, and it actually can go a little bit lower than that before we have a bounce. So the bullish case is that it's going to come back down. It's going to hit this HA market bias indicator more or less above or below or right on it. And then it's going to come back up for another, it's going to have a a higher low right around here at that 435-ish level, and then come back up. Now, you got to keep in mind that inflation is mostly back down. With that said, that doesn't necessarily mean that the Fed is going to start lowering interest rates right away. There's a couple of things to keep in mind. So for one, they could pause and hold it for a little bit, or they could even raise rates even more, although we don't really see that happening. And what is important to keep in mind is that unemployment is going to lag interest rates. That is something we've been talking about on this channel for about a year now. So as unemployment raises, you are most likely going to see some sort of downturn in the stock market. Even if it's just a small percentage, there are less contributions to the 401k. There's people that have less money to spend. On top of that, it's just overall sentiment is going to affect the market. And even people that are not directly affected by the market could be a little scared to go long at a certain time, right? So it is important to keep in mind. That is why we have our strategy on TQQQ, where we are just adding to our position if it goes lower, and our target is the previous highs. So we talk more on that in other videos, and we will do some more down the road. But let's just get into some big guys here that you all like to see. Now, what is really awesome on Tesla for a bullish case is that we are pretty much all systems go right now. So we are above the market bias indicator, and the market bias indicator is green. That is bullish. We can zoom in a little bit here, and we can see that the 7-period simple moving average is above the 25-period exponential moving average. So the 25 is the yellow, blue is the 7. That is great. We are above the 0 line on the Trendillo, and we are even in the green territory. That is also bullish. And we can blow this MACD up right here, and you can see as of the 20th, we were above the 0 line on the MACD. So that is all bullish, and that is probably why Tesla is up 4.51%. There was some news here. Taiwanese Tesla supplier Hoda retools supply chains with first U.S. factory. Okay, whatever. S&P 500 top and bottom performing stocks at blah, blah, blah. Nothing really important. It's really just the indicators here. Now, we do have a little bit of consolidation, and I wouldn't really call this a resistance per se, but with this whole consolidation here, the previous high was at about 246. It's about 248 right now, so it does look like it just barely went past it. And it's so difficult to tell. It's hard to even see. So you might as well just call it right at even right there. So if you get another positive day above 246.72, like if tomorrow is bullish and it's higher than it was today, that's really looking good, at least for the short term. Probably going up to previous resistance, which is about 259. All right, let's check out Nvidia. Let's see what Nvidia is doing. And Nvidia did break this downtrend right here. So we're going to get rid of that just so we can see everything a little bit more clearly. It just looks like overall momentum has really kind of faded. Now we did break above, go back to previous highs, but was just unable to get over it. You can see also that while we are still above the zero line on the Trendillo, if you look at the MACD, we had the MACD line cross under the signal line, and the histogram is now red, suggesting that in the short term, Nvidia is headed for a little bit, at least a little bit of a breather, and you can see that it is down 0.87% on the day. We are going to end with crypto. We're going to end with Bitcoin real quick. So Bitcoin been consolidating for quite a while. Let's just hide these drawings real quick. All right. So Bitcoin zooming out. Now, what is really great to see is if you look at past history, I mean, this previous bull run, when it was above the market bias indicator as far as price action, we were doing pretty well. Even back here when this was like the dead cat bounce of a lifetime, we still saw prices from let's see, where did it turn green? Turned green at about 47,000, reached back up to 69,000. So that's obviously huge percentages right there. And you can see on this latest one, it went from 28,000 and at least up to the high is 38,000. So while there is diminishing returns on Bitcoin, there's still a lot of money percentages to be gained. And we are just going to be following this market bias indicator on Bitcoin and on crypto. And if the price action is above the market bias indicator, the market bias indicator is green, things are looking pretty juicy, because we can zoom out to the weekly real quick. And this is logarithmic, right? So you can see right here, we had bull run and then like a breather coming down and then a little bit of consolidation and then a bull run and then a breather and a little bit of consolidation and a bull run. And then we have a breather and now we have a little bit of consolidation. And it almost looks like this is the start of the next bull run. And I think really honestly, at this point, Bitcoin is just waiting for the Fed and inflation, all that to clear out. In my opinion, with the halving coming up in 2024, I think crypto investors, institutions are really, really looking. They're just waiting and licking their chops for Bitcoin to come next. And I think Bitcoin's low at 16.5 is probably in. Again, it depends on what the market does. But if it gets back to that 16.5 level, that is going to be a great accumulation period. But I'm just some guy on YouTube giving my opinion, just like every other YouTube stock channel out there. So if you do like this content and you want to see more, just hit the subscription bell, but also just hit the like button. It is the easiest way to help out the channel. One single like helps me out tremendously. So please do so. Until then, we'll see you next time. Thank you.